Stock market analysis and projections on the S&P 500. Some important information. Please do take a moment to read this slide. It tells you about our approach to the markets and what that means for you as you use our information. One more little announcement. You can see the top 60 named market pros in the next 6 days starting, well, it starts October 9th, and I'm going to be presenting October 11th at 10 a.m. How to ride the big impulses for greater profits. Plus, I'm going to talk to you about the biggest issues that prevent consistently successful trading. And there'll be a special offer at the end where we're going to announce our new day trader service. Plus, we're going to give away a cycle analysis workshop. Sign up at the top of the askSlim.com front page to be able to attend this great event for free. Sign up right now. Stock market analysis, S&P 500 short-term analysis. But first, Arvi is going to bring you a great piece of analysis here as he looks at FEZ. And he's going to show you the interplay between the S&P 500 and the FEZ and why risks will likely remain for the stock market into early 2024.
Hello guys, this is Arvi Ramachandran, and in this video what we're going to do is walk through our weekly cycle analysis on the S&P Euro Stoxx 50 ETF or the FEZ. Now note, on Tuesday we did our askSlim country ETFs video where we look at our intermediate term cycle analysis on 21 countries from all over the world. It gives you a great sum of the evidence understanding of what those core global money flows are doing. And this video is available to askSlim level 2, 3, and 4 members. What we see is that this blue cycle in the FEZ is also a very key cycle throughout the European markets. And they say that there's a low that's due 1218 to 25 in the FEZ. Now note, what we have done on this chart is we have added in the S&P 500 cycle bracket here in green. And there's a really key interplay going on here with the FEZ and the SPX. So let's just briefly highlight it. If we go back here to July of 2021, we formed our low in the FEZ and had a rally as we got into that rising phase. And then we had a test of the low as we formed our low in the S&P 500 cycle, and then turned back up after that, as the FEZ was still in a rising mode. After that, we curled back down as both the S&P cycle as well as the FEZ cycle were in corrective periods. That's this sell-off right there. If we go ahead now and move forward, you can see that we had both the FEZ and the S&P cycle due to form lows. That's this sell-off then. And then we had the rally as they both got into rising phases. What happened then is we then broke the low right there and then got into a left-hand translation in the FEZ cycle. Note, both of these cycles were once again due to form lows right in that late part of fall of 2022 as we formed a key bottom in world markets. And then we got into a rising phase with both of these cycles pushing up. And then we saw a sharp rally on the upside. What happened after that is we had a further rally and then a pullback right here into the S&P 500 low right there. Turned up again as the S&P got into a rising phase and then had one final pullback into the FEZ low. So you can see how beautifully that played out. Now, where are we presently? So we had a rising phase going on in the FEZ, but that is now over with on a close through this key intermediate term cycle low at 43.72. So that says that the FEZ cycle is in a left-hand translation where rallies are likely to fail. Note that there is a low that is due in the S&P 500 right around the end of this month, as we know. So we are watching for this to get a bounce off that S&P 500 low. But based on what we see here in terms of the overall cycle structure now in the FEZ, there's a high probability that this rally would fail and we'd still see lower into the end of this year, into the very early part of next year when the FEZ is due to form its low. So this is how we are using the S&P 500 timing to understand what influence it is likely to have on European markets. And the highest probability is that this rally that we would likely see towards year end is really set up to fail for one more hit on the downside into that likely very early part of 2024 time period. As always, if you have any questions or comments, feel free to send me an email. And if you are interested in joining us and seeing more of the videos that we publish throughout the week, please go ahead and sign up for a level 2, 3, or 4 membership at askSlim.com. Thanks again and have a great day.
All right, here's my analysis, and you got a little bit of the bigger picture looking at what Arvi showed you. And what I want you to see right now is the SPY, the S&P 500. Now, earlier in the show, I did a little piece on Apple where I talk about combining cycle analysis and our proprietary indicators, specifically the slim ribbon. And what I want you to see right in here is something that's really important in this analysis. When the slim ribbon is positive, as you see right over here, it's green. In other words, the slim ribbon colors the bars green in here. And when that's the case, it also colors the slim ribbon PO green on the bottom. And the PO gives you these upside resumptions and tells you when momentum is likely to continue on the upside. When you get positive slim ribbon in these minor cycles that you see right over there, what that tells you is that the declining phases, these little corrections in here, will be just that, little. You can see that. The slim ribbon lends support, and it tells you that the money flows are positive, and that it's likely that after these corrections, the market will move to the upside again. Higher peak, higher peak, higher peak, higher peak. Something happened right in here, and that is the slim ribbon went negative, and the price action got beneath this area right over here, which is the low of that minor cycle, and that told you something was changing. It told us that something significantly was changing also. So let's take a little closer look right in here and look at where we are right now. So first take a look here as this cycle was responding to the outflows of capital. As it showed you, it was negative in here, and the correction you could see, or the sell period, was steep. The same thing happened right in here as you had negative momentum, as you can see there on the slim ribbon PO or the slim ribbon. That then turned briefly neutral and positive and then turned quickly negative again. And once it went negative in here, again, a steep sell-off in here because the slim ribbon was negative. You can see that. Positive slim ribbon doesn't fall very much. Negative slim ribbon, then the outflows of capital are much stronger. Now you can see what's going on in here. This is what we call a left-hand translation. What that means is that the peak is on the left side of the cycle, and the peak here was only 3 days into this advance. Now what you have on the bottom in here, after it broke under this low, is just a lot of choppy action. And the slim ribbon, as you can see in here, is wide. It's red and wide and coloring these bars negative, even through this period where it's supposed to get some upside action. Well, it can't because this is such a negative formation that we have in here. And what this is projecting down to right now are lower prices. Let's just take a look right in here. And you can see that that negative slim ribbon right in here is telling you about the momentum is being negative. Here's a downside resumption in momentum right over here, giving you a warning that, well, it can't really rally very much. When I say can't, I mean it is a very low probability. And you can see in here the minor resistances as we have in here. This is around 425. This is around the middle of that is around 426. The bottom of this is around 424 and a half. And this right over here is around 429. So this area here between 424 and a half and 429 is a pretty tough area for that. Also, the slim ribbon will offer its own resistance. So we could get some more chop in here. The highest probability is that it will accelerate to the downside out somewhere here in this period. And generally, the strongest declining periods are right at the end of the cycle. See this last 5 or 6 days here. You can see over here what's showing those last few days. And that's this period over here where there is significant downside risk. Were the market to be able to get up in here and hold into here, then it could possibly only test this low over here around 419. We called 419 down to around 410 as the downside targets. So that's where we are right now. Looking for some more chop in here and failures to the downside, and then moving sharply lower out over here. Now, we always want to look at how can this turn out to be different. And that is, we have a minor warning level right over here, and that is at 429.40. If the S&P 500, or the SPY, gets over that level at around 429.40, it will warn us that the low that happened over here actually extended out over here. That would not change the scenario much. It might push these lows a little bit further out. It would then just tell us that the downside selling was so hard in here that it just extended out by some extra days. That would not change the overall negative scenario. Right now, the highest scenario is it will not get above that 29.40 level, and it will eventually move to the downside. If it gets above that level right over there, 431.85, that will confirm what I just said to you. This is the warning level at 429.40, 431.85 is a repair level that then just tells us that these resistances then come into play in a much bigger way. Again, that would just simply push out by some number of days the timing for this decline, but it would not change the overall negative scenario that we are looking at. Again, the slim ribbon and the cycle analysis combined together is a warning that these resistance zones will hold here, and that the upside, while the market could continue to try, is likely to fail, and the market get into a much stronger downside period in here that is out into late October, potentially out into early November. The bigger picture, again, that Arvi showed you, looking at the intermediate on the worldwide high cap markets, or actually the Eurozone high cap market, is suggestive of the fact that the low doesn't come till sometime early next year. And if you watched what I said in the beginning of the show, the bond market is suggestive that the lows don't come until sometime early next year. So while we are looking for a rally period to develop after this period, starting in early November and maybe even into December, that is likely not going to be anything really huge on the upside, and may actually stall in these resistance zones that we're looking at right over here. So we have been looking for a more favorable November, December. We are still looking for that, but overall, the bigger picture may not allow for much higher prices going forward. So here we are at the midday period on Friday, with the S&P 500 now up 10 after being down nearly 50. And you can see the market, as it has the last few days, really held near this support area down here. That's around 420 on the SPY. And the big question is, can it develop any real upside motion in here? Bonds look like they might get a little bit of a rebound, and that could continue to help the market do a little bit better also. But overall, the picture is not good, and it's just, will it move down here into this late period in October, or will it push out a little bit into this early period in November? That's, to me, the only question, and the bearish conditions remain. That is a look at the stock market. For those of you that are getting our market condition monitor, there's been an upgrade in there, and what I want you to do is to take a look at how you can now get in our MCM Pro version alerts regarding when the analysis that we have does change as far as the conditions of the market. So take a look at that. I think that is very important. That is it for the market. I want you to get our free information. If you're brand new to askSlim, you're going to love this. Sign up for the SIR Daily Snapshot Lite. It's free. Just go to the top of our homepage and sign up there. You'll get it delivered into your inbox every single day with some of our very important information on the S&P 500. So take advantage of this great free offer.